Welcome to the Aul Financial Hour podcast with Steve Aul.
Welcome to the show, folks. This is the Aul Financial Hour with the one and only Mr. Steve Aul. My name is Jessica, along for the ride. But first, Steve, as always, welcome. How you doing?
I'm doing great.
Let's jump right into it here. You know, President-elect Donald Trump, he begins his second administration just days away here. And, of course, he's been promising to extend the so-called Trump tax cuts before they expire at the end of this year. And, of course, he wants to roll that out with some other tax ideas he has into one big, beautiful bill, is what he calls it. But there's one thing that could stand in his way. You guessed it, the cost. Here is Liz Pancotti with the Roosevelt Institute on CNBC.
I think we have a really fragile economy, one that looks okay on paper, but the minute you lift up the hood, it's not great. Trump has proposed $10 trillion in tax changes on the campaign trail between making the Tax Cuts and Jobs Act permanent and, no tax on tips, no tax on Social Security, no tax on overtime. $10 trillion is not something you can recover from a debt and deficit standpoint and from an inflationary perspective.
Woo, $10 trillion, folks. Take that in. Certainly not pocket change. Just saying. Well, I'll tell you what, it sounds like the debate has just begun on that topic. But in the meantime, Steve, what can we do to take advantage of today's low tax rates and avoid higher taxes in retirement?
I like to look at it. A lot of people think exactly what it says. I believe extending the Trump tax cuts is going to be a major part of the bill. There's no way he's going to let that expire. But I think that when we start to talk about no taxes on tips, no taxes for federal purposes on your Social Security or overtime wages, I think that's wishful thinking. That's just my idea of it, is I believe do not have a chance to get through because of what she said, the cost. I think extending the Trump tax cuts was very, very big for us because a lot of people, when they look at taxes, they look at it on that, micro level. What am I going to save in taxes this year? And we like to look at it with a slightly different light, macro. Let's look at the big picture. How much is taxes going to affect you in your retirement years? Because there's two different pictures there, And I have found out in my experience of being here that most people, said differently by most people, but most people are really looking for three things when it comes to investment advice and planning. Mm-hmm. They want a higher net worth, they want more control of their assets, and they want to pay less taxes. And I believe that reducing or eliminating taxes is the biggest thing that you can do for successful retirement. Well, we were crunched for the last couple of years because we didn't know who was going to get the presidency and what were they going to do with the Trump tax cuts. Was it going to expire? So we were looking at very aggressive Roth conversions for people. Now, hopefully within this year, we're going to find out how many more years we got to do that. So if we got 8 or 9 years to do Roth conversion, that's a whole lot better than when we were down to 1 and 2. Mm-hmm. To start looking at it. Because if you have too much money in your IRAs and 401ks, it's going to subject you to tax rate risk in the future. And people always ask me, what do you mean when you say too much money in your IRAs and 401ks? People don't realize that the average amount is about $180,000 in IRAs and 401ks. So if you have an extra large between $250,000 to $750,000, depending on your lifestyle, whether you've got a pension and how big your Social Security is, you might spend down those assets during your lifetime. If you've got a double X from $750,000 to $1.5 million, chances are you are not going to spend down all those assets. You are going to pass those on to your heirs. Triple X, 1.5 or above, you're going to pass a tax time bomb onto your kids. That's about the easiest way to put it. And that's why I said we look at it on the macro level. How much? Because when I ask people, do you think taxes are going to be higher in the future? Almost everybody says yes, they've got to. So let's take advantage of where we're currently at right now, and let's find out if Roth conversions might make sense for you.
Now, listen, we have seen the Fed, they are slowly cutting interest rates. I mean, slowly cutting them. And it's enough that the once high rates that many took advantage of on fixed annuities, they've seen these come down as well. So, Steve, are they still attractive when it comes to guaranteed income, or do we need to be looking at some other opportunities when it comes to annuities?
Well, you look at it, and a lot of people, when they hear the word annuities, grow horns because they've all heard a horror story about somebody got sold an annuity and passed away, a year later, and the insurance company kept their money. So there have been problems, high fees, high commissions to the agents. Those are usually the complaints that we see. But I look at it when it comes to the annuities. We're a full-service firm. Will I use annuity if somebody needs it? Yes. Do I manage money? Yes. So I'm okay either direction. So the question that I start looking at is, what are we doing? Give me the right tool for the right job. So I'll usually look at different questions. A lot of people come in and they say they want guaranteed income. Okay, that's what an annuity is. A lot of companies, when you're out there right now, they have that pension versus a lump sum. That's an analysis that we do for a lot of people. And the amount that they're actually going to give them for a lump sum is lower now than it was 5 years ago. And they're all coming in and say, well, the company's doing this, the company's doing that. No, because of those higher interest rates, they don't have to put as much principal in to guarantee the income that you're looking for. So if you've got a pension and you're looking at pension versus lump sum, give us a call. We can chat about that. But if you're just saying, I don't have a pension, Steve, how can I do this for myself? We'll look at it and say, how much would it cost to guarantee the income? What we usually do in our income analysis is look at it to the point and say, your expenses are X and your income is Y. We have a $2,000 gap between those two numbers. How much would we have to set aside to guarantee that income for you and your spouse's life? That's almost the exact same thing that a pension's doing, but they're guaranteed by the company. We're just looking at an insurance company that says they're willing to do the same thing. Because some of the companies that are having their pensions bought out, they're just having an insurance company come in and give you an annuity to pay for it. So it's almost the same thing. Slightly different, but let's go from there. But what if you just want protected growth? Your income's already made up. I just don't want to lose money due to market volatility. How many people loved after the election, the Trump bump? And then we get into the last 3 weeks and it's like, oh, the markets are coming down. Yes, markets will come up and markets will come down. 10% declines are actually part of the market. What we want to do, and if we have people that are looking for protected growth, I don't want to lose my money like it happened in 2000 or 2009. The worst return I want to get to zero. That's a fixed indexed annuity that's got a floor of zero, cannot go down due to market volatility. Right now, the deals are better than they were 4 or 5 years ago, but they're not as good as they were 6 to 8 months ago. So if you're looking for protected growth,
basketball superstar Steph Curry, he is playing in his 16th season with the NBA, and after leading the Golden State Warriors to 4 championships, Curry tells ESPN that he believes his farewell tour is probably near.
It's okay to accept and acknowledge that the end is near at whatever point, but only because it allows you to enjoy what's happening right now. But I think the more you talk about it, the more you acknowledge it, it levels up just the sense of urgency of the moment now.
All right, so I guess really seeing at the end of the tunnel, the light at the end of the tunnel is kind of what he's talking about here. So what's your message for those who sense retirement is near, but maybe they're not even sure if they're on the right track for retirement?
I think that's the biggest question that most people have. Can I retire and will I run out of money are two of the largest questions that we get asked. And Mike and Rochelle had come to one of our dinner presentations, and I walk around, would you like to sit down with us? They said, well, we're not retiring for about 3 or 4 more years. We'll come see you then. And I looked at it and I said, now is probably the best time to come in and do it. And they go, why? I said, well, how are you guys doing? And I mean, they were tremendous. They were putting a lot of money to their 401ks, their IRAs. I mean, they were a big percentage. They weren't just kind of skimping in there. They were paying themselves first, and I looked at it and I said, what do we do here? Because a lot of people out there have that same question. Where am I at? What can I do? So what we would do for you is bring you in and do that analysis. And we might look at it and we say, how could we shift the way you're saving for retirement? Because putting everything into the IRAs and 401ks, as I've stated before, could subject you to tax rate risk in the future. Then we have to look at the other things that we're doing, because it's more than just taxes. I love taxes, but it's more than that. Income generation. How are you going to replace that paycheck when you're retired? Social Security optimization. When should I take Social Security? And then we look at it for legacy planning. Are you prepared that, God forbid, anything happened to you, that your family or your heirs are taken care of, and that you've thought through what you want to do? And then I look at that investment process. I believe that your investments should be based on need, not greed. Give me the best return that I can possibly get with the least amount of risk possible. And I also believe that preservation of the asset is very, very important, especially when you first start. So I like having something that I can take money out of that doesn't have the big negatives if the market turns south those first 2 years of your retirement. So if you're 3 to 5 years out from retirement, call now. Ask for that comprehensive retirement plan. Let us answer those questions. Are you in line for retirement? Do you have to do more?
We just can't get enough of him. Here he is again, President Trump. This could be a big year for cryptocurrency as he is in favor of its deregulation. Lately, Bitcoin has been setting record highs, and I recently read an article that said that investing in digital assets is not going away, and it should be considered by financial advisors like yourself, Steve. So have you changed your mind on the whole cryptocurrency thing, and where do you stand on this?
I would have to say yes. I mean, it's something that, we get kind of set in our ways, because remember, I have to reflect back when it was only individual stocks. Then it went to mutual funds, and then it went to exchange traded funds. Now there's so many things that we can get involved with. So along come cryptocurrency. It's had its ups and downs, very volatile. We do have the availability to get people into the blockchain type investments. But I also look at it to the point, how much is too much? I look at it for myself. I have in my portfolio for the very first time with some of the Bitcoin / cryptocurrency in my portfolios. Why? Because I don't believe it's easy for me to sell you something that I don't have. I want you to see it's volatile, that it goes up and it goes down, because it's doing it in my account. And then I look at it to point, if you're going to do it, 1 to 3% of your portfolio, not and a max of 5. So those are the things that you have to look at, because a lot of people, I'll just put all my money in something and it'll go well. I believe the greatest return I can get with the least amount of risk possible. It's available. If you'd want more information on it, give us a call. Let's run that risk-reward analysis and see if you have the stomach cryptocurrency.
Thanks for listening to the Aul Financial Hour podcast.
Insurance products are offered through the insurance business Aul Insurance Group, LLC, AIG. Aul Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Aul Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and Aul Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Aul Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any government governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Aul Financial Group, LLC.
This radio show is intended for information purposes only.